What is going on, everyone? Welcome back to Neil K Trades or Neil K Trading. This is how I lost $372 in 6 minutes, I think. Yeah, 6 minutes. It was a really fast trade, really shitty in my opinion. It could be better, it could be worse, but taking this as a lesson and definitely moving on from it. I was trying to short all-time highs. I know a lot of people say not to, especially myself. I say if you can, avoid shorting all-time highs. There's very low probability, it doesn't go in your favor, and longs are more likely to play out, given that markets are at all-time highs. Like I said, like you see one red candle, you're gonna get a massive wick. That shit will rip up like 50 points in like an hour. Like, it is what it is. So just jump right into the trade. Don't want to waste too much time. Alright, so just looking at it here, we had ripped extremely hard yesterday, and as you can see, there's this massive move up, 268 points. We already moved up 268 points from the new day opening gap, and from then we've moved up 500 points since creating that new day opening gap, this massive gap here. So if you don't know already, we have FOMC coming up this week, so that is rate cuts. If you don't know what that is essentially the cost to borrow money, the federal funds rate. It's the overnight fee that banks are charged to, again, borrow money. And I do think that this is pricing in the rate cut. So quickly, if I go to Google, if I go to CME Fed Watch Group, you can see we have FOMC on Wednesday, and the current target, or the current rate that we have right now, is 400 and 425, and we're expecting a we're expecting a 25 basis point rate cut going into Wednesday's FOMC. That is why I think prices have rallied this much. As you can see, this is target rate probabilities for that meeting in 2 days. This is a aggregate of members of the Fed, so Dallas Fed, Atlanta Fed, and other people that work for the Federal Reserve, other economists. This is what they expect to happen. So this is what we're currently at. This is what we're expected to be at. 97.3% of people think that we're going to get a rate cut, while 2.7% of people are expecting no rate cut. So if you're going with the probabilities, if you're going with the people at the Fed, it is a very large percentage that expect that rate cut. So this is CME's website. This is all very accurate. A lot of people in econometrics, in monetary policy, they use this website. I actually use this website on a couple of my exams in my monetary policy class. So the reason I bring that up, I think that price is pricing in this massive move. So I do think we're going to get selling pressure down back to these levels going into that rate cut. If you don't know what pricing in is, it is essentially when markets react to news before it hits the market. So a lot of people at higher levels, they probably already know that we're getting the rate cut. This is that reaction going into this week. So obviously this is Monday. We've had a very large move up. Wednesday, I think we're going to see a big drop due to the fact that we've already priced in this rate cut. So with that being said, just go right into the trade. So I'd seen these highs get swept. I did want to short, like, move back down, hit these equal lows, and then move back up. So I was bullish on the day, but I did want to see these equal lows get taken out before making a continued move back up. And so yeah, we took out this liquidity. We got these massive wicks. Although price did present me with this large green candle, we immediately, 2 minutes later, had disrespected that large move up. This wasn't quite the inverse that I usually take. I usually like to seek it inverse within 6 candles. In this case, this was 9. but I was willing to take that risk. I was quite confident. Trading at all-time highs is very weird, very very shitty. Let's just be real. I'm not a big fan of it. There are not really too many longs that you can go off of. Like, I could have taken a long here. I know I was watching it, and I could have printed 32 points. Just back up to these highs, I could have taken a small trade, 25 points, $500. I could have done that. Why I didn't do that? I was going for a bigger target. I guess greed got to me. Overall, we would have printed 50 points had I taken that trade, and just held it throughout the day. But I like to be quick with my trades. I like them to be concise. Just showing the executions here, I saw this fair value gap get created. I saw liquidity get taken out. I saw this move back down, and we got the down close candle, confirming the inverse. But that's only 2 of my 3 confluences. What did we not get here? There was no change in state of delivery. Although we did try to change the state of delivery on this candle. Massive wick to the upside. In hindsight, after seeing this candle, I should have closed it. After seeing this large candle, and after getting the change in state of delivery to the upside, I should have closed the trade. But I was confident in my trade. I thought maybe we would have taken out this external liquidity one more time before making that move back down. So obviously we had this candle get created. I saw the big wick. We had this candle get created. Saw the large red wick. So I held the trade. What ended up happening? I got stopped out. So it was only 18.5 points. So not a huge loss. I could have lost a lot more had I stuck with my bias, but I'm glad I took that loss. It was a good lesson for me. It was a good way of telling me that I can't win every day. Wow, that voice crack was lethal. I can't win every day. Yeah, we didn't get the change in state of delivery. That was the main reason this trade failed. Had we got the change in state of delivery, we could have distributed back down to these internal liquidity levels. Maybe had a little move back up, and then would have rinsed down to equal lows. That's what I think would have happened, especially given the fact that we had this huge price imbalance here. Although orders did get filled here, I was confident that if we came back down, we would have flushed straight past those levels. But it's okay. Shit happens. Can't win them all. But yeah, can't really complain too much. I managed my risk. That was the only trade I took for the day. After that, I just closed out my computer. No trades on the live account. I just didn't bother, because this bummed me out quite a bit this morning, because I've been on a win streak and that was broken by today. Again, you can't win all your trades, so yeah, I think for the past 7 trades I've lost only 1, being this one, so it's okay. Shit happens. But thank you guys for watching. If you enjoyed the video, make sure to leave a like, subscribe, show some support. If you guys do want more videos covering economics, such as what FOMC is, how it affects the markets, CPI, like I said in my previous video, how that affects the markets, leave a comment. I'd love to explain what I've learned through my degree. I'm in my last year, so I would say I'm pretty well versed in the economy, how the economy works, how it functions, and how everything works as a whole. I have a good understanding of money, and I am profitable. So yeah, let me know. I'm just here to help. Don't feel shy to leave a comment. I'll answer every question you guys have, so really appreciate it. Leave a like, subscribe, comment, share with your friends, and be patient, be humble. I'll see you guys in the next one.